Hey guys, welcome back to a brand new video. I'm RexFinance, and today we need to talk about CleanSpark. Didn't know which sleeve it was on, but it's my right sleeve. My right bicep, because I'm so huge. But today we need to talk about CleanSpark because I don't know what my lowest buy was. I'll throw it up on the screen if I remember to in my editing process. But from lows, CleanSpark stock is up 123%. And lows were hit on December 19th, 2022. So this has been a 123% return in a very, very short amount of time. Now, yes, it's not that much considering the stock is still down 89% from all-time highs. But we need to talk about this. If we have profits, is now a time to take some profits on CleanSpark. I'm going to show you my updated valuation spreadsheet towards the end of this video. Stay tuned for that. If you want access to it for yourself to download it and change my numbers, join my membership by hitting the join button down below or hitting the Patreon link in my pinned comment. We would love to have you join. I have the most powerful spreadsheets. Now, obviously, a lot of CleanSpark's rise can be attributed to the price of Bitcoin, which, as I refresh the page, is at $29,555, which is also up huge from its lows of, $16,000. It's up 76% alone. And a lot of the reason the Bitcoin price is going up is because of this huge banking crisis we're having. Oh, imagine that. Now, don't get me wrong. I have been incorrect about a lot of things, but Bitcoin going up as a result of banking failures and our central bank and our fiat systems failures, that's not something I've gotten wrong. But honestly, if we look at CleanSpark compared to all the other Bitcoin mining companies out there, they have been outperforming every other stock, every other publicly traded Bitcoin miner over the past couple of months, especially over the last 30 days. And I think a lot of that has to do with this press release that came out on April 11th of 2023, where they said they're going to double their Bitcoin mining capacity with $145 million. That is a huge expansion deal. By the way, thank you guys for all of your support on my CleanSpark tour video. I toured CleanSpark's Bitcoin mining campuses. If you're curious what that looks like, hit the eye in the top right-hand corner. I'll make it easy for you. It'll open in a new tab. Just pause it until you're done watching this video. But this is a huge deal. All of these new Bitcoin mining rigs that the company ordered are the most efficient, the newest Bitcoin mining rigs on the market. And not only that, CleanSpark set the basement floor price on these mining rigs. Literally, these mining rigs have never sold for cheaper than CleanSpark just bought them for. This expansion deal has the company purchasing 45,000 brand new Antminer S19 XP Bitcoin mining machines for a total price of $145 million. Who cares about 144.9? That's $145 million. But more importantly, all of these units are expected to be ready for delivery by the manufacturer before September's end. And once they're deployed, CleanSpark is going to be at like 15.9 exahash per second, which their guidance was for 16 exahash per second by the end of this year. So I don't know if they're going to make it or not. They're going to have to purchase another 0.1 exahash per second of mining rigs to make it. No, I'm sure they're going to exceed this guidance and projection like they've done in the past. Hands down, CleanSpark's management team executes and delivers on their promises, projections, and guidances. Guidance? I don't know. Better than any other company in this industry, which is why I've staked my brand behind this company and not another Bitcoin mining company out there. Now, yes, you may be wondering, how is the company going to afford this? This is $145 million, and the total market cap of CleanSpark is $300 million. So they're paying half of their company's total value for this expansion, which that money's got to come from somewhere. And, you're correct to be a little bit worried about that. Honestly, most of that is going to come through dilution. But if we look at an SEC filing, it actually breaks down when these payments are due. It's not all due at once. It's spread out. I would guess the company's already paid the first 20% because they had to pay 10% on or before April 7th. And I'm no calendar guy, but it's April 27th. And then the next 10% was due on or before April 30th. So if they have not paid off 20% of this, they're going to have paid off 20% of this total purchase already within just a few days. Now, the other 10% is due on or before May 31st, and then just over $20 million is due on or before June 30th, and then just over $16 million is due on or before July 31st, and then the remaining 45%, $29 million for September, and then yada, yada, yada. It's somewhat complicated, bottom line, the company owes $145 million for this expansion. So where is it going to come from? Well, honestly, most of this is going to come from dilution of shareholders, which is a risk when you buy this company. Basically, any growth company that is vastly unprofitable or choosing to grow as fast as CleanSpark wants to grow. A lot of their cash needs are going to come from your pockets. They are going to dilute you, but I'll talk about why that's not necessarily a terrible thing or a bad thing at all in just a little bit. But just as evidence of this, a year ago today, there were 41 million shares outstanding of CleanSpark stock, and now there are about 80 million shares outstanding of CleanSpark stock. So in a year, they have doubled their share count, which kind of sucks. That's not fun at all. And then if we go back even another year, they had around 33 million shares outstanding, 34 million shares outstanding. So you can see dilution is a huge pattern for this company. This is how the company has chosen to grow over the past couple of years, which I think has made a lot of sense, especially considering getting attractive loans as a Bitcoin miner is really hard because banks still don't want to lend to you because Bitcoin is so volatile, and that puts the bank at a major risk if you were to default on whatever you borrow from them. So interest rates were not attractive. They have not been attractive basically ever in the Bitcoin mining industry. Now, I think that is going to change over the long term. And another benefit of CleanSpark stock is they have kept their overall debt levels very, very low. So when debt does become attractive for this industry, CleanSpark will have the opportunity to take on attractive debt, unlike these other companies who are already highly leveraged. And some of them were so highly leveraged, they've already gone under. But to discuss why dilution isn't necessarily a terrible thing, you need to understand that, yes, dilution takes away from earnings per share. Whatever the company's total earnings are every year, that number gets split by however many shares outstanding there are. So if they have $100 million in earnings and 10 million shares outstanding, that is what, $10 of earnings per share, I think, if my math's correct. But if you double shares outstanding and earnings stay the same, so $100 million in earnings divided by 20 million shares outstanding, that then is only $5 of earnings per share. But what most investors don't consider is when the company does dilute, they are generally acquiring an asset for the company. So we need to consider the return on whatever investment the company makes via that dilution. For example, when the company goes out and dilutes and they end up buying Bitcoin mining rigs, hopefully those mining rigs will add to the total earnings of the company and outweigh the amount of shares that have been added to the shares outstanding. So if the percentage growth of earnings outpaces the percentage growth of shares outstanding, that is accretive dilution, and that is a good thing for shareholders. You can have dilution and still have more earnings in your pocket, although there are more shares outstanding. So far, the company has done a really good job at this, but that might change in the future, and you need to weigh that when deciding whether you want to buy, sell, or hold shares of this company. All right, without further ado, let's go ahead and get into this spreadsheet, which I'm sure is what a lot of you came to this video for. In this spreadsheet, I have a mining rig purchases journal, which keeps track of all of the company's purchases of mining rigs, how much they paid, the number of rigs they had, the efficiency of those rigs, etc., etc., etc. And you can see so far the company has purchased, including this most recent batch, which yes, they have not completely paid for yet. They've purchased, according to this, 15.282 exahash per second worth of mining rigs, which means to reach 16 exahash per second, which is their year-end goal for 2023, they'll need to purchase an additional 0.718 exahash per second worth of mining rigs, which works out roughly to 7,183 mining rigs that they have yet to purchase in order to meet this guidance. And the dollar investment required for that is around $25 million. So looking through the rest of this year, the capital spend is going to be pretty aggressive for this company. Between the most recent deal, $145 million, and this remaining investment required to reach their guidance goal, we're looking at we're probably knocking on the door of $200 million in capital spend left for the rest of 2023. And again, a lot of that will come from dilution, but in this spreadsheet, I have taken that into consideration when coming up with my fair value for the stock. This is where the meat and potatoes are. This spreadsheet here. The CleanSpark price target, it's called. I view this more as a fair value And I'll kind of walk you through what I have here. In 2021, the company had an actual hash rate of 1.9 exahash per second. Crazy to think how far the company has come. By the end of 2022, they had 6.2 exahash per second. And currently, considering the company's growth for the next couple of months, they have a 50 megawatt expansion ongoing right now. And they'll have those miners up and running over the next couple of months. Currently, the company has around 8 exahash per second of a hash rate. By the end of 2023, they're going to reach 16, like I already mentioned. And then 2024 and 2025, these are kind of just guesses of mine. The company has not yet put out a projection or guidance for 2024 and 2025. Obviously, we're going to run into the Bitcoin halving event, which is going to be really interesting to see how that affects everything. But for the year end of 2023, this is what we really need to focus on in this spreadsheet. If the company can get to 16 exahash per second by the end of this year, I think they will. I even think they'll go above 16. But let's just say 16 for simplicity. They'll have about 4.57% of the total Bitcoin mining capacity in the entire world. That's really pretty impressive. And what that means is the company's going to be mining about 1,251 Bitcoin per month by the end of this year. That is a lot of Bitcoin. Now, at the beginning of this year, I assumed Bitcoin would average about $25,000 per Bitcoin, which gives me a total revenue opportunity of $375 million for the company. So far, that's looking like a good estimation, but if Bitcoin continues to go up, this revenue opportunity obviously will continue to go up as well. And for this year, I have the company spending $350 million, which might be a little bit high, might end up being a little bit low. You really just have no idea in this industry. So there's a lot of guessing when it comes to coming up with a valuation for companies in this industry. You just never know, because the asset that these companies are closely tied to is one of the most volatile assets to ever exist. But with a total capital spend of $350 million and a revenue opportunity of $375 million, that basically means I think the company will have bottom line profits of $25 million. And from here, we can come up with a valuation based on a price to sales multiple as well as a price to earnings multiple. At a 7.5 price to sales multiple, which I've noted here, it just went away, is the industry standard in a healthy market. What I mean by a healthy market is a bull market, a market that is not down 30%, right? I think you guys understand that. So with a price to sales multiple of 7.5 and assuming 50% annual reoccurring share dilution, I come up with a price target of $24, a fair value of $24, using the price to sales multiple for this year in 2023, $47 for next year in 2024, and $44 for 2025. Obviously, take all that with a grain of salt because things are going to change for 2024 and 2025. Using the PE multiple, I think a 40 PE multiple right now for this industry, because it is high growth, is very fair. The potential for huge earnings for these companies in this industry down the road is certainly there, which again is why I've chosen a 40 PE multiple for this year in 2023. But as the industry kind of normalizes, I go down to a 30 multiple for 2024 and then a 20 multiple for 2025. Again, things will change, but using a PE multiple, I come up with a fair value share price of $8.69. Then what I did is I averaged this $8.69 with the $24.07 to come up with my price target for 2023 of $16.38, which means CleanSpark, in my opinion, is 312% undervalued. But even if you take my low-end share price of $8.69 using the PE valuation, it means CleanSpark is still at least 100% undervalued in my opinion. Now again, if you don't like my numbers, you can join my membership, download the spreadsheet for yourself, and change my multiples to come up with your own fair value. So if you guys are keen watchers of my YouTube channel, you probably realize my spreadsheet really didn't change all that much. And I apologize, but this is going to lead me down a wormhole. I'm just telling you that now. Basically, why my spreadsheet hasn't changed, why my price targets haven't changed, is because I have believed in this management team for the last couple of years, because every time they have put out a guidance or projection, they have met that guidance and projection, or they have exceeded it, which is very different from the rest of the industry. And over the past couple of years, I've gotten a lot of flack for being a fan of CleanSpark stock, because CleanSpark doesn't have the mining rigs yet. And this is what drives me crazy. I think Wall Street has this industry so wrong. And the fact CleanSpark is rallying off that press release of their huge expansion deal is just evidence of that. But in the end, that's why I invest. That's what an investor should do, is they should recognize opportunities, or they should recognize where they think Wall Street is wrong and capitalize that over the long term, which I think is what I'm doing here. Sure, CleanSpark has never had the mining rigs just sitting in inventory waiting to be deployed and mining Bitcoin. They have never had the mining rigs on hand. Unlike Marathon, unlike Riot, unlike so many other companies in the industry. And for some reason, Wall Street and investors seem to value how many mining rigs a company physically has on hand. But for me, that makes zero sense whatsoever. And there's one big reason why I say that, and that's because if you don't have execution, if your management team does not execute, it doesn't flippin' matter how many mining rigs you have sitting in storage ready to be deployed. In CleanSpark, quite honestly, you can go back to my videos way long ago, and I've said the same thing. CleanSpark is the only company in the industry that has executed and exceeded guidance and projections. So I put my faith, my trust in the management team that they would deliver on this 16 exahash goal by the end of this year. So I had already factored that into my personal fair value of the company. But Wall Street was not considering that because they had not yet signed a deal for the rest of the miners they needed, which doesn't make any sense. So as long as Wall Street keeps getting that wrong, in my opinion, I'm going to continue to be a shareholder of CleanSpark. I think the company is still tremendously undervalued compared to the peers. I think execution should have more pull on Wall Street in this industry than it does. I think the amount of assets a company has, the amount of Bitcoin mining rigs a company has on hand should have way less pull than it currently does. And that's kind of the opportunity I'm seeing here in this industry. And CleanSpark is the best opportunity to expose that, to take advantage of that. So if you agree with me, make sure you do your own research. I am not selling my shares of CleanSpark. Now, I'm not nearly buying as aggressively as I was back when CleanSpark was in the $2 range, but I'm not going to sell because, again, I think the company is tremendously undervalued. So with that, I hope you guys have a great rest of your day. If you're new here or returning and not yet subscribed, please subscribe down below. It makes my day. Leave a comment what you think CleanSpark is going to do for the rest of this year. Will the stock go up? Will it go down? Or will it stay flat? Can't ever rule that out. But keep your head up and 10 toes to the ground. Go kick some butt. I'll be back with a brand new video very, very soon. Thanks for coming by. Peace out.